This video is sponsored by my Patreon. Check the link down below or go to StockSurfest.com/Patreon and join. You get all my buy, sells, call-outs, morning update videos, plus more. Check the link down below. Join now. Let's get into the video. So the stock market's about to close in 3 minutes from now, guys, and let me tell you, today was yet again another rough day out there, and we got to break it down in this video. So if you all find value, hit the like button, subscribe, do all that good stuff. Drop me a comment. Let me know your thoughts, and make sure to get your 2 stocks free from Webull and your $50 free from M1 Finance. Did I mention they're free? Free money, guys. Link down below, and let's get right into the video. So like I said, we're about to close in 3 minutes from now, and the crazy thing is, guys, the VIX is up 4%, and I guess that's not too crazy, but one thing that is crazy is the metals today are ripping. Gold is up 1.7%, big move for gold, and we have silver up over 3%. So it seems like a lot of people, at least today, are flooding out of equities. The VIX is up, metals are up. That's telling me, hey, there's fear out there. There's obviously volatility, and there's uncertainty. And that's kind of what we've been seeing over the past couple of days/weeks overall in the market. So let's break down what's going on with SPY. Actually, now that I'm looking at it, SPY's down 1% now. It was just down 0.8 when I started filming this video. So this thing is crashing into close. We clearly took out the lows from I think yesterday, or was it pre-market? Yeah, pre-market lows were around 453. Now we're trading in the mid 451s. Like I said, we're crashing here heading into the close. Look at this on the intraday chart, guys. We had a lot of volatility today. We opened up at 457. We spiked up to almost 460. Like I mentioned in my previous video, we got rejected at 460. We dumped all the way down to about 454. Then we had that midday relief rally, and then pretty much since 1 p.m. on the East Coast here, it's been straight up slaughter. This thing has gone from 458.30. Now it's pushing down to the low 451s. It's down about $7 intraday, or 1.4% when it comes to percentage terms. So volatility's up. It's creeping up even more as I'm making this video, and the markets are about to close in 10 seconds from now. And like I said, we took out the lows from pre-market, and going back to that 4-hour chart, it's very obvious to me, and by the looks of it, we're already there. It's obvious that SPY wants to go to 450. That was the low point from the end of December, also early December. And not to toot my own horn, but did we not call this out, guys? Did we not say this? And lo and behold, here we are at 450. And let me tell you guys, look, if we break 450, we're probably going down to 445. 445 is the next gap here that I do have outlined on this 4-hour chart on SPY. So let me know your thoughts down below in the comments, and let's take a look quickly at Triple Q. Let's see what's going on here. And not to toot my own horn, but I told you guys, look, if we got rejected at 380, 378 on Triple Q, which we did, and I told you guys if we even just fall under 378, which we did, there's likely a good chance, at least. It's not 100% for sure, but I said there was a good chance we go and maybe test the lows from a couple of days ago, being 370, 369. And if we took those lows out, which we did, 365 was next. And I was saying that. Now we're at 366. We're pretty much at 365 as Triple Q went down over 1% today. It went down 1.1% to be exact. And just like SPY, like we saw, Triple Q completely collapsed heading into close. This thing was so volatile. I mean, it had that intraday or that midday rally. It went from 368 to about 373, and that was at about 1 p.m. on the East Coast. And once we hit that point, it was straight up slaughter after that, from 373 down to 366. It lost about 2% of its value intraday from that midday pop to the big drop later into the close. So markets are volatile, guys, and like I've been saying over the past couple of videos for a while at this point, I don't think this volatility is going to calm down anytime soon. I mean, yes, in a month or two, do I think it's going to be calm down by then? Probably, but over the next couple of days, next week, 2-3 weeks, I think we're going to be seeing more volatility. That's just my personal opinion. And again, it will die down at some point. And don't be the guy or gal to try and time that, because timing is pretty dang impossible, guys. And if you do get the timing right, you're just lucky. Let's be honest. Timing the market and trying to get, oh, it's gonna drop on this day. Oh, it's going to stop. Volatility is going to stop on this day. Playing that game is it's a loser's game, at least from my personal experience. We have to trade what's in front of us, trade the trend, and at this point in time, it's clearly downtrending. So what do you all think? Drop me a comment. Make sure to hit the like button, subscribe if you all find value in my videos, and check out the Patreon if you all want all my moves in the markets, morning videos, private Discord, all that good stuff. It's all on Patreon if you guys want to work closer with me. That's linked down below. And now let's talk about some stocks. Number one is Ford. And I think Ford stock, guys, was screaming for a reason to sell off here. And we got it today. The stock went down 8%, down 1.9. I don't even know why I said it like that. $1.90, not 1.9. I guess you can say 1.9 if you want to, guys, if you want to look like a weirdo. I guess I am a weirdo because I just said that. But they went down $1.90 today, guys. And like I said, this stock has been screaming for a reason to come down because it's gone up so aggressively in such a short period of time. This thing went literally, guys, a month ago on the dot. 30 days ago, this stock was $19. It ran all the way to almost $26 in about 3 weeks. That is insane for a company like Ford. I mean, this isn't, don't get me wrong, there is going to be growth with Ford or in Ford, from the company, right? But it's not this hyper growth tech stock that going up, 20% in a month or 30% in a month, it would make sense. It's Ford for Pete's sake. I mean, it went up 30% in a month, less than a month, 3 weeks. So it makes sense that we're seeing this pullback on news that I think 200,000 vehicles or Ford, let's see here, Ford reportedly recalls 200,000 cars over brake light malfunction. That's kind of what I'm seeing here in terms of the catalyst of it falling. So it makes sense. It was looking for a reason to sell off. We got that reason. Today we went down 8%, and overall now from the all-time high here, or from the recent high, we're down about 14%, 15%. So this stock is in correction territory now. It's getting towards that 180 SMA, where I believe here on the 4-hour chart, which is at about 21, 22 bucks, I believe at that point we will get buyers, maybe some sort of a relief rally. So I'm looking at that for Ford, and I did mention 26 as the all-time high. I might have misspoke there. Let me see. What is the all-time high? Yeah, I knew it wasn't 26, guys. It was 38 bucks back in the dot-com era. This stock hit 38 bucks in 1999, which is nuts. So yeah, this has been ripping. It's gotten a bit too hot in a very short amount of time. It needed a pullback. We got the pullback. So let's see if buyers do step in around 21, maybe 22 bucks per share. The next stock that I'm looking at here, I guess it's not a stock. It's a REIT, a real estate investment trust. And by the way, I made a REIT video, I think a week or two ago. So if you all want to see that, go to the search bar, type in Stasserfest, real estate investment trust, or REIT, REIT 2022. You'll see that video. The second one here is STAG, ticker symbol STAG. This is STAG Industrial Inc. This is a REIT that has a lot of exposure. I mean, it's full exposure to industrial real estate. Think Amazon warehouses, think these multi-100,000 square foot facilities. This is what STAG deals with. And I actually added a position today. All you guys on my Patreon know that you get all my moves. I initiated a position in STAG today, and I've actually been buying a lot of real estate investment trusts over the past couple of weeks. I bought STAG today, and I plan on buying more. I bought recently Vici Properties. I also bought Realty Income recently. So these are 3 new longer-term plays that I want to be obviously invested in, or else I wouldn't have bought them, right? And Stag's actually a monthly dividend payer. They currently pay about, I think, $1.40 a year in dividends, which comes out to about 3.3%. And again, they pay monthly. Same with Realty Income, and Vici pays quarterly. And some of their tenants, when it comes to Stag Industrial, guys, include Amazon. Amazon's actually the top tenant, and Amazon only has 3.8% of the pie, so they're not very top heavy. In fact, I believe their top 10 clients, or whatever you want to call them, they make up about 10% of the portfolio, so they're very diversified. Some other tenants, that's what we call them here. Some other tenants include FedEx, Eastern Metal Supply, American Tire Distributors, DS, Smith North America, and there's many more, guys. We're talking a lot of tenants. Again, the top 10 tenants only make up about 10-11% of the entire portfolio of real estate here. So Stag, in my opinion, it's down about 40 from $49. Now it's sitting at 43, 42.75. It is down about 11-12%. It's in correction territory. That's good enough for me to start buying a little bit of a position here. And whenever I'm building a position out, you guys might know this, you might not. It might be common sense to some. It might not be to others. I buy a little bit up front. I don't go all in. I'm not going all in 100% right with that first buy. I'm going to go in probably 10, 15, maybe 20% at first, and then wait a little bit, ease into the investment again to get that, get some dollar cost average action in. That's kind of what I'm doing here, and I'm going to be buying this for the next couple of weeks/months. That's the goal as of now. And this kind of looks good, honestly, as a swing trade too. If this thing's able to recover right by the trend line here, let's say we get back over $43, $44, we might be able to make a move back up mid-high 40s on Stag. But just to let you guys know, we're not confirming that breakout quite yet. It's a little bit too early. And talk about the friggin' Trump's back, guys. Jeez Louise, this thing has been up a ton, and then it just goes down a ton. I mean, recently, I think it was up 15-20% in a day. That might have been yesterday or the day before that. I forget. But today it went down 10%. It gave back a lot of those gains. Look at this. Look at the 20-day chart for DWAC here, guys. This thing was $45 back on the 6th of January, just about 2 weeks ago, and it just hit $93. I just realized that was this morning. Holy crap. So we hit $93 this morning, and yesterday morning this thing was at $71. So it went from 71 to 90 yesterday, pulled back to about 83 at market close yesterday. Then today it ran up, took out the highs from yesterday, hit $94. We hit a higher high, and we pulled back pretty much all day after that, which makes sense. Profit taking, people want to take some money off the table, especially with a risky play like DWAC here. So I think this dip could very well be another opportunity if you guys have balls of balls of steel, and if you have a bit more risk tolerance. You might be able to pick this up anywhere from $75-$80 right by the 50 moving average on the 20-day chart, and maybe we could get some kind of bounce back. And I think if this thing breaks back over $80-$81, that would be the confirmation of that breakout. So I'm going to put my alert at $81 per share on DWAC. I want to see what it does from there. And the next stock that I'm looking at that's been dipping the past couple of days is Intel. And all you guys on my Patreon know I also own Intel. I've been buying this thing over the past couple of weeks, and this sold off today. Finally, it finally got some profit taking. This went down 2% on the day, down about $1.10, a little bit over that. And we're noticing it's clearly breaking under the 50 SMA on this 4-hour chart, and it's heading probably down towards the 180 SMA. And you may be asking yourself, Stas, is the Intel rally over? Is the rotation into value, which Intel is value, is that over? I don't think it is. I don't think it's over, guys. Honestly, I think this dip will be bought up. I don't want to say 100% for sure because we don't know. Obviously, like I say on my channel all the time, I'm not a fortune teller, but I'm freaking confident, all right? I'm confident. I have my own money in Intel, and I'm not selling. I'm not selling it anytime soon unless we get a huge rip into the mid-high 60s. Then at that point, I would probably sell some. But at this point, look, it's dipping. I think it's another opportunity to accumulate more shares. I didn't buy more shares today, but I might at some point later this week, maybe next week if it starts bleeding down even more. So Intel, I think right by 52, 53, right by this moving average on the 4-hour chart. That is where buyers, in my opinion, will come in to push it higher, mid-high 50s again. And CME Group is another one, ticker symbol CME. This one up 2.7% today. We're noticing it's currently breaking out of this ascending triangle on the 4-hour chart, and we're taking out a multi-month resistance. You guys can see 230 has been a sticking point since the beginning of November, guys, and now we're trading almost at 233 after market hours. So it's not full on breaking out yet, but it's getting pretty dang close, guys. It's getting pretty dang close. I'm telling you, if we take 235 out, this could probably go to 240. Rather 250 even, 250 plus. I mean, that's where I think this ascending triangle could ultimately take us. So keep your eyes on the breakout that could be occurring. I mean, it's already starting to occur here on CME, and I'm going to put my alert let's put it at 233. I'm going to watch it from there. And we also have McDonald's. McDonald's has been pulling back lately from 271. Now it's trading at 255. It is down a whopping 6%, which really isn't much in the grand scheme of things. And McDonald's has been one of those stocks that has been absolutely ripping. And from, the value investor's perspective, if you're looking at PE and all that good stuff, this is probably overvalued. I'm not going to argue you with that, or in terms of that. I'm not going to argue with you. I think it is overvalued, actually. But looking at it from a swing trader's perspective, this could be yet again another dip that gets bought up, and we can make some short-term money. I mean, look, this thing has been pretty predictable. It's pulled back. Each time we've hit a higher high, we got a bit overbought. It's pulled back, tested the trend line, buyers have stepped in, and we've bounced. And I don't want to make it seem so easy because this could easily collapse and not repeat what it's done over the past couple of weeks. But I'm just going to be watching it because why would it hurt for me to watch it? It doesn't hurt. It just takes a little bit of extra effort, add it to the watch list, set some alerts, because I'm telling you, if history does repeat itself, we do break 260, we start reversing, this could easily go back 270 plus, especially as we're seeing rotation into value, even into stocks like this, which aren't, I guess, value per se. I mean, this stock's been going up over the past couple of months, even as it's been overvalued. It's just been getting more overvalued, right? It's crazy, right? So watch out for McDonald's, MCD, and another one that's just free falling right now, guys, and I just realized it today, is Home Depot, ticker symbol HD. This thing hit 422 back about a month and a half ago, early December, and now it just hit 360. So from 422 to 360, this stock is down 15%, almost in a bear market. It's almost in bear market territory. So it's nowhere near finding a bottom yet. It's a falling knife. We're not seeing consolidation. I mean, today alone it went down 2%. But what I am watching for is some signs of consolidation. I want to see when we are going to find a bottom, and looking at this yearly chart may help you out doing that. It might give you some more insight on where things might bottom out, and by the looks of it on this yearly chart, that bottom could be right around the corner. Based on this time frame, you guys can see buyers have stepped in religiously right by the 180 moving average over the past multiple pullbacks over the past year. So guess where we are now? Right by that moving average, right by 350, 355. So now that we're almost in bear market territory, and these blue chip stocks, guys, I'm telling you, they don't stay in bear market territory long unless we're in a market crash or a bear market overall. So now that Home Depot is getting there, we might get a relief rally. I think, in fact, we will get a relief rally. But as always, I'm not a financial advisor. You guys must always do your own research and your own due diligence. And with that being said, that's it. We talked about Ford, Stag, DWAC, which mind you guys is very speculative. Be careful with that one, but there could be money made in the short term. We also talked about Intel, CME, McDonald's, and Home Depot. So let me know your thoughts. Drop me a comment down below. Make sure to smash that like button and subscribe if you all found value in this video. And make sure to join my Patreon if you guys want all my buys, sells, call outs, morning update videos, plus more. That's all on Patreon. Link down below. Or you guys can go to StasserFest.com/Patreon. That's StasserFest.com/Patreon. Make sure to also get your $50 free from M1 Finance. Use my link. Deposit $100 with them. We each get $50, and you all could also get 2 stocks from Webull with any amount of money deposited. All of that is linked down below. I'll catch you guys in the next video. Thanks for watching as always. Keep crushing the market. Stay safe out there, guys. Peace out.